Hello, Apex entrepreneurs, and welcome. Now, on Wednesday the 19th of February 2020, we published a video on this channel in which we predicted a crash in the stock market in the next 3 years. And since then, the S&P 500 index has gone down by more than 10%, and everybody is panicking. For those who didn't watch the video yet, I invite you to click here and watch it. So, today in our weekly video, we're going to show you 8 tips on how to deal with a recession, and together we'll explore the mindset you need to have in order to make millions in the stock market. The first tip we'll see today is that you need to be patient. A recession happens, and it's part of the game. It happened before and it will happen again. And we will always recover no matter what. Unless of course we're dead, or some aliens have occupied the planet. And if either of these options has happened, well, we'll not be interested in stocks anyway. So let's take a look at the stock market in the last 90 years. There was the 1929 Great Crash, the 1973 crash, the dot-com bubble in the early 2000s, and the subprime mortgage crisis in 2007, and of course many other recessions. So as you can see, we have always recovered, and the overall direction of the stock market is upward. So no need to panic. All you have to do is wait, and the market will recover. It could take years, of course, but it will recover. If you want to make millions out of the stock market, you have to be patient, and the market rewards those who are patient. Just listen to this quote here from one of the greatest investors of all time, Warren Buffett, when he says the stock market is a device for transferring money from the impatient to the patient. The problem is that the majority of people are like Scrooge, greedy. Once they make a bit of money, they sell. And once they lose a bit of money, they also sell, because they are afraid to lose more. That's why the majority of people fail to make money in the stock market. So all you have to do to succeed is just do the opposite of the masses. Be fearful when others are greedy, and greedy when others are fearful. To give you an example, in 1973, Warren Buffett invested $10 million in the Washington Post. Now, the Washington Post shares lost more than 20% in the first year. But instead of freaking out and selling, Buffett held these shares, and now they are worth more than $1 billion. Let's move on to our second tip. Invest more money than you usually invest when a crash happens. When the masses are panicking and selling, you do the opposite. One of the quotes we like the most is from Baron Rothschild. Buy when there's blood in the streets, even if the blood is your own. So even if your own stocks are crashing, buy more of them. I know it's tough for the majority of us to invest money when everybody is selling, but you should do it, and this is how you can make millions out of the recession. Because when a crash happens, you will find a lot of undervalued companies. So when a crash does happen, we recommend you apply the investment strategy called the dollar cost averaging strategy, or DCA. Using this strategy, the investor divides up the total amount to be invested across periodic purchases of a target asset in an effort to reduce the impact of volatility on the overall purchase. But I know, I can hear you saying, what is this? Well, just wait a second and we'll give you an example. It's very simple. So, if you have $6,000 to invest, divide them into 6 parts, and invest $1,000 each time the market drops by 5%. Remember, a crash in the stock market is a great opportunity to move up the ladder, so don't miss this opportunity. Now, let's move to the third tip, which is the most important one. In order to make money from the stock market, you need to subscribe to this channel, hit the notification bell, and destroy that like button if you haven't already done it. In fact, if you subscribe to this channel, you'll learn lots of tips and tricks on how to invest wisely, how to master your personal finance, and how to build a business and earn your first million, and many other interesting things. So hit that subscribe button and let's move on to the fourth tip. And here we'll talk about where we should invest. You should always search for value and invest in undervalued companies. And when a crash happens, it becomes much easier to find undervalued companies. Now, there are a lot of methods to value a stock. This is an enormous subject. But don't worry, we've prepared you 2 videos where you can learn how to value a stock and what is the best time to buy stocks. All you have to do is click here to watch these videos. But this could be overwhelming for some of you. Maybe you don't have the time to understand all the ratios needed to value a stock. Again, don't worry, there is a very simple option, which is to invest in index funds. Index funds are a portfolio constructed to match or track the components of a financial market index, such as the S&P 500 index. The S&P 500 index fund includes the largest American companies listed on the New York Stock Exchange, or NASDAQ. It includes companies like Apple, Google, Facebook, Coca-Cola, and Amazon. When you buy an index fund, you are betting on the economy and not on one company. So if one company goes bankrupt, there are 499 other companies, and some of them might be performing well enough to protect you from losing your money. So all you have to do is buy the S&P 500 index fund and keep holding it for a long time. Let's take an example of someone who invested $10,000 in January 2003 and held them until January 2019. His $10,000 has transformed into almost $40,000. So he made $30,000 without any effort. Also note that if the 2007-2008 subprime mortgage crisis did not happen, he could have multiplied his investment by much more. Before we continue, let me remind you that we are not only a channel, we are a community. That's why we ask you don't hesitate to drop a comment and tell us what you think about what we've said so far. We reply to all comments. Now let's move to tip number 5. Invest in United States Treasury bonds. US Treasury bonds are widely regarded to be one of the safest investments around because they lack significant default risk. Therefore, it's no surprise that investors turn to US Treasuries during times of increased uncertainty as a safe haven for their investments. So, let's check the performance of long-term US Treasury bonds during the 2007 subprime mortgage crisis. We can see that when the SP 500 index was experiencing a 36.5% decline in 2008, US Treasury bonds made an impressive 20% return in the same year, and that's because of the huge demand on these securities. That's why it's very interesting to hold US Treasury bonds in your portfolio, because when the stock market crashes, the Treasury bonds will skyrocket and protect you from major losses. Now, let's move on to tip number 6. Invest in dividend stocks. Dividend stocks are stocks of companies that regularly pay shareholders a piece of their earnings. So, if a stock distributes $3 per share per year and you own 1,000 shares, you'll be paid $3,000 per year without making any effort. That's why we recommend you invest in companies that have a solid track record of continuing to pay dividends even when the stock market is completely collapsing. Let's take the example of Coca-Cola, which is the world's largest beverage company. Coca-Cola is part of an exclusive group of stocks known as dividend aristocrats. To be considered a dividend aristocrat, a company must have a managed dividend policy that has increased its dividend payout for at least 25 consecutive years. Coca-Cola first raised its dividend in 1963 and has continued to do so ever since. If you go back to 2008, we can see that even in the midst of a worldwide crisis, Coca-Cola continued to pay its dividends. So, dividend investing is very important, and you should definitely hold some dividend stocks in your portfolio. And if you want to know more about dividends, we've prepared a complete video for you. All you have to do is click here and watch it. Next, tip number 7. buy Bitcoin. Bitcoin was by far the best performing asset in 2019. But I know a lot of you will tell us that Bitcoin is a scam that will burst sooner or later. This is because most people still don't know the value that Bitcoin puts on the table. Bitcoin is by far the most important invention in computer science since the internet. Bitcoin is the natural evolution of money. It's a decentralized, unforgeable currency with limited supply. There will only be 21 million Bitcoin in circulation. Nobody can wake up in the morning and print Bitcoin like they do with paper money. Bitcoin allows you to do 100% secure, borderless, and instantaneous transactions with almost no fees. You can send $1 million worth of Bitcoin from Tallahassee, Florida to any small town in Nigeria within less than 10 minutes, and you pay less than $10 in fees. Using a traditional bank, the transaction could take a week with at least $3,000 in fees. So, do you see the huge value of cryptocurrencies? To know more about Bitcoin, I invite you to click here to watch a full video in order to understand what Bitcoin is and how it works. And the eighth and final tip is to invest in gold. It's a well-known fact that the price of gold moves up when the economic conditions worsen. Although we don't like it so much, a lot of investors buy gold in times of crisis, and it's viewed as an efficient tool for diversifying a portfolio. So why not have some gold in your portfolio? So, to sum up, if you have $10,000, we recommend you to invest $2,500 in the S&P 500 Index Fund, $2,500 in dividend stocks with a great track record, $2,500 in long-term US Treasury bonds, $1,500 in Bitcoin, and $1,000 in gold. At the end of this video, we invite you to visit the description below, where you'll find many resources to help you make money from the comfort of your couch. You'll find the books that we recommend to help you acquire the right mindset for success, a free video course that will teach you how to generate passive income and how to create a six-figures online business, and much more. Of course, all the methods we teach or recommend are not get-rich-quick methods. There is a lot of work to be done up front before enjoying that money falling into your bank account. So, don't hesitate to take a quick look at our description and enjoy learning. That's it for this video. If you enjoyed it, don't forget to share it with your friends, and hit that like button to help us with the YouTube algorithm. By the way, if you're still here while the music is running, here are two videos that you'll love watching. The first one will show you the one thing that rich people buy that poor people don't, and the second one will show you the secret to become a millionaire in your 20s. Just click on either one of them on the screen right here.